Welcome again, everyone, to this edition of the Real Wealth Solutions podcast. I'm one of your co-hosts, Darren Light, along with my co-host, Greg Scully. Today, we are more than happy to be joined by Nick Ameluxen. Nick is a multifamily investor in Austin, Texas. And we just want to start out by getting to know him a little bit better. Nick, if you don't mind, tell us a little bit more about your professional background, how you got into multifamily real estate, and how you got to where you are today, and then we'll just start unpacking some of that journey, if you will.
Yeah, sure. So first off, thanks for having me. Excited to be here, guys. So my professional background is in no way related to real estate. I started off as a technician at Volkswagen. I eventually moved to Audi, and that's what I did for almost 11 years. Through that time, I kind of rose through the ranks. Was a shop foreman for a while, but kind of got to the point where I had maxed out what I could get out of that career. I was earning pretty much the most I was going to earn doing what I was doing. And when I started going to management roles, I realized that wasn't really for me. And so when I started investing, it was really just like, how can I get other streams of income to increase my current income? Because I had tapped out, but I knew that I could do more. So I took kind of the backwards way to real estate. I started with stocks. I was a huge Warren Buffett fan. I read every book I could find. If you could see my office, I actually have a lot on my bookcase back there still. But started dipping into that asset class and got burned pretty bad, honestly, investing in Volkswagen. So there you go.
They had a bit of an issue back a couple of years ago, I remember.
Yeah, I got hit on all sides on that one. So invested like a month before Dieselgate happened.
Oh man.
And so, not only was my professional income cut because that was like 30% of our customers, but then also all my investments got halved. It has a happy ending though. I mean, I held on till 2019 when I ended up selling for pretty much what I bought it for. And then I moved that into an apartment. So it worked out, but that kind of taught me I need control of an asset, right? Like I thought I did all the research I could. I thought I knew what I was doing, and I was like, I had no control over it, right? So that's when I started getting into real estate and started small, bought a single family, then I house hacked a duplex, which I'm actually still doing because I just love the dynamics of it. Bought some more single family, have a turnkey in Memphis. That I can't get rid of. And that's when I started looking to transition into multifamily, do something larger. I think I hit that moment that everybody hits where it was like, I need to scale because if I'm just buying one or two of these a year, it's going to take me forever to get to where I want to be. And so that's kind of when I started down that path.
Are you still house hacking? Is that what you said?
Yeah, I am.
So how many have you done? Or is it still the same project?
It's still the same project. Yeah, we started house hacking the duplex. And while living here, we bought more rental property because I just love the fact that like all my bills are paid by the resident next door. I haven't been able to get away from that.
Mm-hmm. Yeah, and that's just a great way to get started. I mean,
oh yeah.
You can snowball that. Well, as far as you want. I mean, refi and roll, buy another house hack, but that next time make it a 5-unit. I mean, you can take that as far as you want. I've seen or I've heard people end up owning very large portfolios by themselves completely without partners by just snowballing a fourplex on a 3.5% down FHA into, 10 years later, they're doing pretty well for themselves. So.
Yeah. I wish I was that smart when I started out to snowball and to do like 3.5% FHA down. I was a big Dave Ramsey fan. So anybody knows Dave Ramsey, I was like, I'll put 25% down and work hard to pay these all off. I got out of that mentality after a while, but.
So do you see yourself continue to house hack moving forward?
No, not really. I like it. We're probably here in the future going to transition like just rent out the other side. I'll keep the duplex. I love the duplex, but
right.
We want to move a little bit closer into town. So
yeah.
Yeah.
So
well, I was just going to go back to the stock thing. Yeah. You go down to VW headquarters and knock on the door and try to give them some advice on how to handle the PR related to Dieselgate. I imagine they brought you right up to the executive office and were willing to take your input on, how to work through this mess. Of course, that's not how it works, and that's the control thing. I think that's where a lot of people kind of see the light in asset classes. I mean, I still do some stocks because there is some money to be made there, but you have no control over, short of voting on that proxy ballot.
Yeah.
If you open it, when you get that in the mail. So yeah, there's a ton of exposure there that maybe a lot of people don't realize. And you were doing it actively, so it doesn't sound like it was wrapped up in your 401k. So you actually had a little bit of control that you could leave.
Yeah, exactly. Yeah.
So did you do any REITs or anything, or is it just,
no REITs?
So it wasn't real estate based stock beyond Volkswagen. Okay.
Nope, none of that.
Okay.
So how did you realize that multifamily was a better way to go? How did you start to educate yourself with that? What was your first step towards being involved in a multifamily property?
Yeah. It was one of those things, you don't know what you don't know. Right. So, like I said, I had a couple of single families that had started to appreciate really well because I'm in Austin and I bought in 2015, 2016. And so when I was looking to transition to larger deals, I was still in this I'm going to do it all myself kind of mentality. And I realized, like, even with the appreciation I had in my properties in Austin, I wasn't going to be able to buy much out here. Right. It's just a higher barrier to entry into the multifamily world out here in Austin. So I started looking in other markets. And as I was kind of diving into them, there was a lot of questions I had, and I didn't, I would go on Bigger Pockets. I've been listening to podcasts for a long time, so I'd go back through to try to find the answers, but a lot of it was very scattered. And it's, if you ask a question on some of those places, it's like you get 17 different answers from a lot of different opinions, and you really don't know which, and can't really vet their backgrounds of the people giving the advice. Right. So it was tough. And then that's kind of when I started to seek out like a multifamily mentor coaching kind of deal. And I got lucky. So I've been listening to the Jake and Gino podcast, the Wheelbarrow Profits podcast, for years at this point. And so I just reached out to them directly. I did absolutely no due diligence, which good or bad, it worked out for me. But that's kind of how I got started in the multifamily space.
Yeah, and that's the thing with, like you mentioned, the appreciation side of those houses in Austin. Mm-hmm. If you continue to buy in Austin, everything else is appreciating along with it. So you're taking some profit, but you're also buying at a higher price point when you roll that money. So unless you go out of market, you may not be necessarily realizing as much of a gain by continuing to buy in appreciating market. So are you invested anywhere outside of Austin, or is everything down there?
Pretty much everything. So I still have that single family in Memphis. And this is part of that cash flow versus appreciation thing. The cash flows on it is great, but I tried to sell it last year, and it's pretty much worth what I paid for it a few years ago, so it's,
I had the same experience with turnkey family in Memphis.
Yeah. We probably even use the same provider. And so I'm also part of a 12 unit in Atlanta. But that's pretty much my only foray outside of Austin. We are working on a project in Los Angeles right now with my partner, but we haven't closed on that yet. So I don't know anything out there yet.
Mm-hmm. Okay.
So you mentioned earlier that at some point you realized you couldn't do this on your own.
Mm-hmm.
is part of that equation. Finding a mentor and a coach. So that would be a sort of an education partner / mentor, if you will. But then on the other side of that, where did you find maybe your first partner that you invested with? How did that relationship come about?
Yeah. So as my, education got a little bit more focused and my eyes were kind of opened to this world of, partnering on deals, which is something I hadn't explored at all in the past. Never used family money or anything like that. I realized as I'm looking outside my market and talking with people, it's a lot of work to get started in a market, right? Any market, whether it's in your backyard or outside of it. And the more I looked at it, it was like, I'm going to have to establish relationships. I'm going to have to find, undervalued properties, find partners there, boots on the ground, all this work. And I was like, well, I might as well just do that in Austin and have that higher, my barrier will be that higher price tag. And so I knew going into it, I'm going to have to find somebody or multiple people to kind of come in on the back end and help with the funding of it. And also being a multifamily project. And at the time I didn't have, I had real estate experience, but not multifamily experience. So I was kind of looking for a partner who brought a little bit of both, right? Some equity and some experience. And I kind of just took the shotgun method to that. And I went on Bigger Pockets, part of the mentorship community I'm part of, talk to everybody in there that I could, because networking is a huge aspect of this. But actually how I met my partner was through Bigger Pockets. And I made it just kind of like a goal to reach out to 3 people per day. Somebody who had like apartment investor or syndicator next to their name, who was a real estate investor in Austin, or just, related to the industry in some way. And it was basically just introducing myself, trying to get them on the phone or out to coffee or to lunch, just to kind of talk and expand my network. And so that's how I met my partner originally.
You were just private messaging them
Yeah.
through the platform, right?
Yep. Yeah. Being a mechanic, you don't have a lot of people interested in investing. So my network for real estate was quite small. So that was something I focused on a lot starting out.
Do you know how many people you reached out to, just out of curiosity, if you were going to put a round number on it?
Oh man, I don't know.
Or even an odd number on it. It can be an even or an odd number.
Let's do an odd number. I'll say like probably 35.
Oh, that's not bad.
No, it wasn't bad.
Low number.
Well, it was, surprisingly, as I got going, the response rate was huge. I thought most of these people are just going to blow me off, right? They don't know who I am. I don't have much to offer at this point. And I probably got like a 95% response rate, phone calls, coffees, lunches. I met a lot of great people, big apartment investors, big names in the industry. And I had no idea who they were at the time.
So you focused people that were actually living in Austin then?
Yeah, that was one of the focus areas. Definitely.
Okay. Well,
definitely. One thing that always baffled me when I started trying to invest in Austin, I would go to these meetups. I had my own meetup, and everybody I met, nobody was investing in Austin. They were all San Antonio, Dallas, Houston, or out of the market. So I was really trying to find somebody, because somebody's buying apartments in Austin, right? Yeah. It's not trying to find someone who was, to kind of figure out how they made that work.
What was their aversion to Austin?
I think kind of the same. It's a pricier market. It's also smaller. So the assets that do trade is more competitive for them.
Okay.
And I think, I don't know why, honestly. When I started looking at deals, just on like a return and cap rate basis, I would look in San Antonio, I would look in Austin, and I would see marketed very similar cap rates. Now where they traded, who knows, but that's why I was kind of focused on Austin. So I was like, why would I go a few hours outside of my market to these other ones to get the same return profile, right? It doesn't make sense to me.
Yeah. I mean, long-term, if you're planning on sticking around Austin for any length of time, I mean, you'll eventually have the home court advantage, because the market knowledge starts to compound so much. You'll see a property and you're like, yeah, I know exactly where that is, and that is way overpriced. Or, I don't like something going on down the street, or there's a train track right behind it, stuff that you're not going to see
Yeah, exactly.
On Google Earth type stuff.
Yeah. And also that ability to move quickly. I mean, especially in competitive markets, if I get sent a deal, I can underwrite it, fairly quickly, at least enough to see if we're interested, and be out and take a tour of the broker, then the next day if they have availability. Where if I'm outside of my market, that takes a little bit more time.
Are these mostly JV deals, or are you doing syndications?
Yeah, everything I've done so far has just been JV.
Oh, okay. Because that kind of leads into a question. We're, Middle Tennessee, we're in more of a cash flow market. So we don't model a lot for appreciation, whereas, and this is more of a question than a statement, in Austin and in Dallas, DFW, that's a large component of the returns projections is appreciation. Now, with it being a JV, a joint venture, it's a lot easier to get everybody on board because it's a smaller pool of people that have to realize the business plan. But can you talk about the analysis side a little bit more? Because I've been on a couple calls with people in Texas, and we've been going through it. I'm like, this thing doesn't cash flow. I mean, I'm only showing like 2%, and you're one. They're like, oh yeah, that's fine. I'm like, oh, okay. This is what boggled me. They're like, yeah, that's what it is. I'm like, oh, okay. So, I mean,
yeah,
comfortable with that? I mean, obviously you are, but why are you comfortable with that? And a lot of that has to go to demographics. So now I'll just kind of drop it into your.
Sure. Yeah, and I'll answer it, kind of the best way I can. To start off, you mentioned if we're doing JVs or syndications. So we are pursuing syndications. I kind of see it as a tool in the tool belt. And you mentioned, JVs being more flexible. That's definitely true. I mean, that's a nice aspect of them, right? Everybody can it's easier to get everybody on board. If we have to make some sacrifices for the business plan, that's a lot easier to get, two people to agree to that than it is, 25 or 30, especially on the front end. Excuse me. I think, especially now as we're, prospecting more and more and finding more and more investors, it's just finding the people whose investment philosophies kind of line up with you, especially like even as LPs, because a lot of people, we found it's more important to have consistent cash flow than very high cash flow with our investors if they're still hitting that equity multiple and getting all the other benefits of real estate, right? And it does depend on how big of an investment they're making as well, because if you're investing 50,000, the difference between 8% and 4%, we do a pref that accrues, but just an annual cash flow, it's not that life-changing of an amount, right? Mm-hmm. It's just more of the consistent cash flow and then the upside. But yeah, I mean, my other market's LA, so both very low cash flow markets. I think it's just a different dynamic for what we're looking for, right? In a cash flow market, I feel like the bulk of your returns are going to come from cash flow, right? It's kind of the opposite for us. We don't want negative cash flow. Obviously, we wouldn't buy anything like that. I just don't have the stomach for it. But you want consistent cash flow, and somewhere in the realm over the length of the hold of 5 to 6%. So that's not super high, but it's not incredibly low either. But also, as we're doing the value add and adding additional income to the property in these lower cap markets, every dollar we add increases that value so much more. Right?
Yeah, I mean, that's the advantage of the low cap market. I mean,
exactly.
Even a modest increase in NOI.
So what's your typical?
Is a much higher increase in the value. So yeah, I guess I'll just it's just a transparency thing. Very early, you have these conversations. You're like, hey, this might be a little lean out of the gate.
Oh, exactly.
But look at what Austin's doing with population growth and all this going on, supply demand. You kind of tell the whole narrative, and you're like, this is why we think in 5 years we're going to be able to achieve this. Although, full disclosure, not a ton of it is going to be coming from cash flow. So everybody good with that, and then
you guys also
depend. Sorry, go ahead, Darren.
Do you guys model a typical hold time? Is there a typical hold time that you want to go after?
Yeah, I mean, we look, I mean, anywhere in the realm from 3 to 7 years. It's really project based, right? You know, what makes the most sense for the project. Right now, we're definitely going longer in our terms when we're modeling out. But I would say on average, we're looking 5 to 7 years.
It's interesting that our returns are sort of different in the fact that where Greg and my market is, it's more about cash flow, and appreciation is just icing on the cake. Whereas you're sort of the opposite, as long as you have some consistency in cash flow, but yet our hold time is about the same as far as modeling goes.
Mm-hmm.
And you know, if somebody offers us a crazy number before that hold time is over, we would consider taking it or not. I want to go back, if you don't mind, to your partnership and just how, you know, if you met with, let's say, 35 people, at what point did you know, or did you have a feeling, okay, this is someone I want to partner with, and vice versa? And how'd that just go from there? Another meeting, another 3 meetings, you know, I can do this for you, you can do this for me. What'd that look like? And did that person already have some investing background or doors under their belt as well?
Yeah. So going into it, I kind of knew what value I could bring right out of the gate. I had some funds put away, so I could definitely help a little bit on the equity side. But the main thing was I was in one of the hottest real estate markets in the country and was boots on the ground, actively looking, right? So I knew that the value I could bring was the deal. And so kind of how I approached the conversations after the initial one, where it was just kind of learning more about them and just kind of, you know, fleshing out if there's any interest in working together, or just kind of learning from them, right? Even if they dropped one little nugget of information, that was awesome, because I was just this person basically cold calling them. How the conversations evolved from there is, as I was looking at deals and making offers, I would reach out to them specifically and give them the whole spiel, right? I would show them my underwriting. I would show them the deal, show them what I was looking at, you know, why this makes sense to me, talk about the area a little bit. Because I ended most of those calls, on the first or second calls, with, hey, if I find something in Austin that looks like blank, right? If it looks like this, would you be interested in taking a look? And no one's going to say no to that, right? Especially if they're interested in that market. Mm-hmm. And it just kind of evolved from there. I'm not, that's a skill that I don't really have. I'm better at it now, but I didn't really have at the time of like building those relationships. So for me, it was all just like, what value can I bring? And that's kind of how it evolved. It's as I was looking at properties, I'd send them out, you know, people, the potential partner would be interested. We'd talk about it. I'd make an offer. We'd lose the deal. So it's just like, then you move on to the next one until we finally got one, right? And so once we won a deal, that's when it started becoming more like a partnership, instead of just two guys like looking at deals together. And then while we were closing on that first one, we got our offer accepted on a second one that we were following up on from a few months. So the partnership kind of just came around through that natural process of, you know, it wasn't like we met up and we're like, hey, let's go buy properties together. It was like, if I find something like this, would you be interested in taking a look? And it just evolved from there.
And you proved yourself to this person. You maybe in your mind you thought you did, and maybe that's what they were waiting on. It's like, okay, let's see if this guy's for real. Yeah, I've met him. He seems nice. He seems smart. Has some funds. Can be boots on the ground. Yada yada yada. Now let's see what he's got. And you did that. I think that's great. And so, like you said, whoever this one person is, it sort of just organically grew from there. Now, is that person also in Austin?
No. So okay. He's in Los Angeles, which is why I mentioned that as my other market. So once we were closing on our third deal, everything that we had going on was very complex. He also works full-time out in LA, and had, you know, he also has a portfolio out there as well. So that was his experience. He had about 19 years experience when we met in multifamily. So, I mean, pretty much what I was looking for, right? A partner with experience and some equity, who was looking to move into a market like Austin, and that I could help. And I kind of came on board with him full-time about October or September of last year to help out across both portfolios. Yeah, it's been fun. You know, I think it's a holdback to the days when I was a technician. If anybody's familiar with how technicians get paid, it's on flat rate. So you don't get paid like an hourly wage, you get paid what you produce. So that's kind of how I took it to real estate as well, right? I'm a big fan of like performance-based contracts. You get paid when you produce, and that's kind of how I viewed it going into it. It's like if I'm going to I got to bring value, in some way.
And you've been full time now, multifamily. How long?
Just over a year.
What was that day like when you said, "Here it is, boys"?
Terrifying. I wish I could say it was like, one of those happy moments, and it's definitely a happy moment, but it was more like, oh my gosh, what am I doing? Having been doing the same thing for a long time and making good money at it, it was a bit of a jump to step away, to leave that comfort.
Yeah, I think that if there's not an element of that, it may not be the right thing to do. I know that sounds crazy, but I think if you're, the cliche is something like if you need to be uncomfortable. I can't remember what I'm trying to say, but you know what I'm trying to say. Be comfortable at being uncomfortable, something like that. Anyway, and just talk about it from a risk standpoint.
I agree with that. Yeah.
What was that timeline from, starting to blast on bigger pockets to getting that first deal under contract?
I think I started, when I reached out to my partner initially, it was like December 2018 is when I had, I think, the first message I sent out to him. I looked the other day. And from that to closing the first deal was about 7 months.
Oh, wow. Okay.
Yeah.
That's quicker than I thought it would.
Yeah.
Yeah.
That's
awesome.
It's as I tell most people, real estate is really just a numbers game, right? It's how many deals can you look at, analyze, and get to.
Yeah, talk about like that boots on the ground role, because I think it's really important. But maybe there's people out there that are similar position to you, have limited means, but they're in a great market. Mm-hmm. So when you were doing that boots on the ground role for somebody that's more experienced, what did that look like? So were you getting the deal flow, or both of you were getting the deal flow? Were you doing the tours alone? Did anybody fly? I'm just curious as to what was actually boots on the ground for this prospecting time.
And were they listed or off market?
Sure. Yeah. Well, Austin's a bit like the Wild West, right? So some stuff gets listed, but most of the stuff that gets traded, you won't end up seeing listed, right? I mean, some stuff does. And so in my opinion, boots on the ground is kind of, even if you're buying larger stuff, you're in the 100+ range, having those boots on the ground is still incredibly helpful. As I think you even alluded to earlier, you can look at maps and you can look at census tract data and all that stuff to kind of drill down on good neighborhoods, but there's still those things that you don't really know until you're in the market, walking it and kind of, know the people and what's going in. And you just kind of get that vibe, right? I don't know if I'm describing that well, but
no, I think yeah, exactly.
Absolutely.
Yeah. And so, especially in a market like Austin, where, as I said, when I'm talking to people in Austin, they're all investing out of market, right? So I'm assuming that most people who are buying in Austin, I was assuming at the time, are from out of market, investors who hear about the growth and, are maybe in some of the coastal areas where it might seem pricey in Austin compared to like San Antonio or Houston. But compared to like Los Angeles and New York, it's probably, pennies on the dollar. And so building that relationship with brokers was kind of a big target of mine, I guess I would say, because I knew, one, that they had all the deal flow, and in Austin, it's really about like 6 to 7 people who control most of the deals that trade. So building relationships with them, so I can get a look at those deals. And like I said, starting out, as I was finding deals and finding ones that worked, I would send them out to my potential partner, but I would also send them out to other people, right? Because I didn't want to have all my eggs in one basket. And I let them know that, like, hey, somebody else. It wasn't like trying to like play the, I don't know, be deceitful about it in any way. But I knew it was really up to me to make it work. Right. And so if one person backed out, I didn't want to be like, oh, well, now I'm back to square one. So I continue to have those conversations with potential partners, people interested in investing in Austin. It really was probably to the point where I would get a deal, where we got a deal under contract and we did inspections, is when my partner would fly out. So up to that point was essentially all me, going on the tours, meeting with brokers, getting the deal flow. And to this day, it's the same. Most of the time, my partner doesn't get involved until, at the point we're making an offer or negotiating.
Okay. So you're doing the initial underwriting.
Yeah.
Sharing it. I'm sure there's some back and forth going on with kind of all of it.
Yeah. Yeah, definitely. We have we go over deals before I make offers on them, but getting to that point is pretty much what I do. And as far as the deals we've done so far, so one was listed. I saw it pop up. I reached out to the broker that day. We toured it the next day. So we had our offer in before they had the OM out, right? So it was just kind of like a teased. And that's one of those things I was saying, like if you can move quickly, which I think is a big reason why we won that deal. The next one was a completely off-market deal brought to us by a broker that we had been looking at a few deals with before. And the third one is my favorite, which is like a pre-market deal, similar to the first, but it was like we were on that short list of people who get reached out to, and they finally get the exclusive, and they've got a rent roll and a T12, and they just tease it to a few people. And that's kind of how we got that deal.
Oh, you mean there are brokers that provide that information up front, right?
Some,
awesome.
Yeah.
We've seen the same benefits from being in a market and continually touring and being in front of these guys, is that eventually they do start calling you with a pre-market deal, or I've had brokers call with just questions about our smaller market up here in Johnson City because they're not completely familiar with it. So those relationships, it takes a long time, but they do eventually pay off.
Yeah.
As long as you're consistently engaging with people. I mean,
yeah. Oh yeah.
You can't just go tour and then drop off the face of the earth if you decide not to buy it. You have to stay in front of these people and continue to show and tell them why you're not buying it or what the deal is, and they understand.
Yeah.
Most of the time, I mean, I agree with that. It's, if someone sends me a deal, I try to get back to them within 24 hours, worst case 48. If I tour, I'm always trying to follow up the next day with kind of feedback or additional questions. And I keep most of my brokers on a 2-week rotation where I'm just kind of reaching out, seeing if they got anything pipeline, just kind of checking in. Because being consistent and following up, and that's key.
Let's see. You seem to be very active do you have your own podcast?
No. So my partner,
I was looking at, is that Quantum Capital?
Yes.
Okay.
Yeah.
So Quantum Capital has a podcast?
Yeah. We have the Wild West Real Estate Show. And that's hosted by my partner.
Oh, okay.
Yeah.
But you're also involved in multiple meetups. I saw, we share some common groups, underwriting pods, meetups, little masterminds.
Yep.
Talk about the benefits of those, just being active with other active real estate investors, because me personally, I like talking about the specifics. You can read a book, they're very broad and stuff, but so much of this business reveals itself when you're looking at specific properties or hearing about other people's experiences with specific properties. And that's when theory kind of turns into reality. So, talk about just your involvement with other groups and, how you've benefited from them, even though they may not be your market specific.
Yeah. I went from like a no networking ever kind of phase in my life to networking all the time. very introverted. So that takes a lot of effort for someone like me, but that should just go more to prove the point that it's completely worth it, right? I mean, getting out there, like you said, you can read all the books you want, you can listen to all the podcasts, but it's really in having those conversations with people, even if you're not looking for partners, but still just to exchange information where you're really learning those like really cool little nuggets of information that you won't hear elsewhere, right? Whether it's in your market or in another market, or just learning tips and things that worked for other people. Starting out, there were a lot of good meetups in Austin. I was working still 60 to 70 hours a week. And so networking was tough, and making those meetups all the time was tough. And so I started my own. That was kind of how I got around that. And now that I've transitioned this full time, I help run my partners in LA, especially now that it's virtual, it makes it a lot easier. And then I rolled my meetup into the Multifamily and More group earlier this year, actually right after we went into lockdown. And so that's when we formed the South Texas Multifamily and More group. And so I'm pretty active in there. But, without hashing on it too much, being involved in those communities is huge. You learn from some really interesting people who have diverse backgrounds and are just absolutely crushing it. And you learn things that you wouldn't have elsewhere. I mean,
you nailed it. And I think
Yeah.
Greg did as well. I'm a firm believer in, I tell this to other people, all the podcasts and content online is awesome, but there is nothing can replace, or can you put a price tag on, meeting someone in person at an event or a meetup or virtually webinar, and just learning from their story, what they've already done, how they made a mistake, and moving forward. Everything that is in multifamily real estate has already been done. All you have to do is go out and do it the right way. And
Yeah.
there's more than one way of doing that. So I totally believe in that.
Hey, it's Greg from Real Wealth Solutions. If you'd like to know more about our passive income opportunities, jump onto realwealth.solutions and hit that schedule a call button. We're always happy to talk about our multifamily and flip projects and to answer any questions you may have. Again, that's realwealth.solutions. We look forward to hearing from you. And now, back to the podcast.
I want to go back, if you don't mind, to you say you guys have a refi that's about to close. Is this a refi on the very first property that you bought?
Yes. Yeah.
Okay. And so how huge is that going to be for your returns and projections moving forward, as well as, what's your plan with those funds, I guess, maybe as a partnership and or personally, as far as investing goes?
Yeah, we were hoping it'd be a bigger refi than it is, but we're getting some other advantages out of it. So when we closed that deal, we locked up a 4.8% rate, which at the time we were pretty happy about, right? And then a few months later, it started getting cut. And then the next deal we closed at a 3.65. So immediately we're like, oh, I wish we could refi that first loan, right? And so that's kind of why we moved this year, because rates are at an all-time low. We did a step down prepay as well, so we didn't have any yield maintenance or anything like that. So we dropped off in prepay after a year to an acceptable level. So that was a big impetus behind the refi. We've added some value, income has gone up, but the biggest thing was to take our debt from a 4.8 to a 3.55, and we went from no IO to 3 years IO.
Wow.
And this is actually going from an agency to a bank. So those banking relationships are huge, because this bank actually financed our other 2 deals in Austin. So they're very comfortable with us. So on a proceeds out, it's not, in any way significant. But we're taking our monthly debt payment from $26,000 to $13,000. Which is, on the cash flow side is huge.
Now we're talking cash flow.
Yeah, exactly. Exactly.
That's incredible. I remember you sharing that story with me a little while back, and I just wanted listeners to hear that. So are you guys going to use the funds put back in the property for some CapEx, or just roll it into a new one, or what's the deal?
No, the idea is to put those back into the property. We paused a lot of stuff going into COVID, expecting collections to come in poorly and things like that. We started to build up our war chest. I think, like most people, the first, actually through most of it, collections have been relatively strong. So I wish we wouldn't have paused that, because I feel like we'd be in a better position with the refi today. But that is the plan, is to roll those funds back into and finish the upgrades to the property.
You guys have owned that one
just over a year. Just over a year.
Wow, that is awesome. That, like you said, relationships with the current bank.
Oh yeah.
I'm wondering if all the numbers didn't totally jive, but yet they're like, yeah, these guys are the real deal. Let's just do this. But
yeah, I don't know what they saw on their end, but I'm appreciative that we were able to get it closed. Yeah.
Well, that's just a total flip on what we were talking about a year and a half ago. Everybody was refining from banks to agency.
Yeah.
And now, funny how things change. The banks are far more competitive than they had been, especially on the reserve requirements type thing.
Oh yeah. Yeah. That's a big part of it.
So yeah, it's making sure you keep all your relationships up and going, so that as things change, you sounds like you already had the banking relationship, but
yeah, that's why it's good to have. I mean, we always use loan brokers. I feel like having a good loan broker in your corner is a huge help, personally.
Now, are you working directly with the bank now? Was that originally
no,
through a loan broker?
We're still going through the loan broker. Yeah.
Oh, okay. That's interesting, because you could upend, you could do a workaround, but that's the relationship business. This guy's done a good job for you. Let him continue to do a good job for you.
Yeah. Also, dealing with banks, you want to make sure you're presenting everything in the best light. And so having a loan broker there to kind of help put that in the best light for you is invaluable, because they really know. They have, no matter how good your relationship is, in my opinion, they're going to know the best way to do things, because they're in that business 24/7 every day, right? And having those conversations multiple times a day.
Plus, it's one more thing off your plate. Even though you're gathering the information, sending it to them, hopefully some of the back and forth, he can sort of cut that off, so to speak, because he knows, he or she knows how you guys operate or want to operate, and has your information, if you will. It's just one more thing off your plate. Huge time saver.
Yeah. Yeah. I mean, they, I can't speak highly enough about the loan brokers we use in LA. They're on the ball. I mean, when it comes to getting all of our information collected and put into PFSs and scheduled real estates, and they take a lot of that work off our shoulders, so we can focus more on the actual closing of the properties, which is awesome.
That's great.
Yeah, and being able to, they can provide that interesting filter of, hey, before you don't send that directly, throw it across my desk. Let me take a look at it, and we can see if, something needs to be presented a little bit differently, like you said, because they know, they might know specific tendencies of specific potential lenders, and how to, it's a little bit of marketing, how to best market the narrative of your project and you as a borrower to them in the best light.
Yeah. It's all about the story with them, right? Is having the best story to explain why this happened, or why this got better, or why it got worse, and having them spin that story the best way is helpful.
So yeah, Austin sounds like you said, in most places collections were pretty good. You didn't see anything significant economy wide, and I'm just curious of what you think the recovery will look like there, because those markets like Texas or the Southeast that were already going very strong.
Yeah.
Everybody's kind of taking this pause and a dip and kind of just concentrating on operating a little bit. But when things do get back to normal, there might be an even more relocation to the Texases and Floridas. And I think we've already kind of seen that with individuals. But that may increase from the corporate relocation as well. And you know,
Yeah.
you would know more about. Is there anything that you're seeing in you know, permits or just in economic development news
Oh yeah.
that's already, you know, pointing to post-COVID potential?
Yeah. Austin had double the amount of corporate relocations announced in 2020 than it did in 2019.
Wow.
So I think it was somewhere around I forget the number. I won't say the number because I'll butcher it, but it was pretty high for the amount of jobs being brought here just through relocations. Announced, right? So it's announced. So it's not like they just show up here the next day. But long term, it's just, you know, that's one of the weird things about our market. So not to go on too much of a tangent, collections have been great. The eviction moratoriums, Austin specific, are a bit of a bear to deal with, and so that's kind of the biggest thing that's been hurting us through the pandemic, is navigating those. And then Austin, you know, is also a booming market, but they're also adding a ton of supply to the market. So you really got to be strategic in where you buy, and because of that increased supply, especially right now, when, you know, not a lot of the students came back, and leasing activity is slowing down towards the end of the year. Typically, like, you know, July, August, those are some of our busiest months for renting. And that just didn't happen this year, right? We got a little bit of increase, but not much. And so we have seen rents fall, like I feel like everywhere, not dramatically, in the class we're in, I should say. I think in the A and B plus class, they fell more than they did for us in the C and, you know, B minus class. So that's kind of where we got affected. But as far as, you know, long-term economic prospects, I'm very happy to continue to buy in Austin. You know, even just, I mean, what's the most recent one? I mean, Tesla's one of the kind of the most recent news of moving into the market, and they've already started building and hiring. You know, and I only assume more and more is going to follow that in that area. But even, you know, even last year, the Apple campus got announced, and those are just big ones. The Amazon, they're building like a 4 million square foot warehouse, actually near where my duplex is. So,
Wow.
you know, we've got the soccer stadium going in. I don't know when that's supposed to be completed, but
MLS?
yeah.
So I was there about a month ago for an event, and my Lyft driver that picked me up at the airport to drop me off at the hotel, a Vietnam War veteran, born and raised native Austin person, and he's like, man, I've seen all this change a lot. And he mentioned Tesla, he mentioned Apple, and we just started talking about the market. And he was just talking about how in the last 5 years alone, total night and day of how fast the economy has grown there. And I had heard probably from you and maybe some other people, is like, just look around downtown and count the number of cranes that are in operation. And when I got downtown, I was like, wow, he was. And the thing that amazed me personally about Austin is that, just my opinion, the downtown part itself was not huge to me. And by huge, I mean, you didn't have these enormous skyscrapers like you hear about in some of these other big towns. Maybe it's just more spread out this way, but still development was just being everywhere. And what a huge advantage you have of just being there and already knowing the market and having all these relationships. So like you say, yes, things are being developed or supplies being upped as far as multifamily, but you better know where you're buying and how because of that. Because A class generally, in what I've learned in the last couple of years, that's the one that gets hit the hardest, you know, as far as absorption. It won't be as high as it sometimes it gets overbuilt, if you will. So you got to know what you're doing there.
Yeah, I agree. That's funny you mentioned the cranes. I always count them when I drive down 35, and actually yesterday I counted, there's 15 that I could see from 35. But you're right. I mean, Austin downtown isn't that big. I mean, comparatively, I mean,
right.
In the city, we just topped 1 million people. In the MSA, we're just over 2 million, but that's not, you know, earth shattering numbers. It's not small, but it's not huge.
Yeah, it looks very spread out to me. And I think you mentioned, was it called the Hill Country? Where they're, it might have been Denver. Sorry. Anyway. where a lot of
I
these
travel
corporate,
so much, I get the cities confused.
well, I didn't mean to go there. I didn't mean to confuse anybody. Anyway, very
Dark
fascinating.
sticky, yeah. I'm curious. I know for us, the COVID experience is our first gut check, and kind of a declining market. I think it probably is for you. We're kind of
Mhm.
have a similar experience level. Was there anything that you saw, your partner doing, having almost 20 years of experience? He had been through 2008,
Mhm.
2009. Was there anything that you saw him doing that you were like, why is he doing that? And now that becomes more clear, having been through um, a little bit of a gut check with COVID, or if not, are you looking at things a little bit differently now from an underwriting point of view than maybe you did a year ago?
Yeah, yes to both. I mean, I'm definitely looking at things way differently on an underwriting perspective than we did a year ago. Um, and it's one of the things I struggle with when we're looking at new properties, and probably why we haven't moved on anything or won anything this year. We had a deal under contract going into COVID, but it was like right as contingency removal was hitting is when all the lockdowns were going into effect. And so we pulled out of that deal, mainly just because, and I'm kicking myself for it because it was an excellent price, an excellent deal, but I think I still would have made the same decision now, knowing what I did know then, right? Loans were getting pulled anyways, without going into that. So we've definitely adjusted how we underwrite, specifically from a rent and occupancy perspective for the first 12 to 18 months of what we predict going forward. Um, and and like a bad debt kind of scenario as well. But um, yeah, it was very helpful to have Mark throughout this time period, right? Even going into it, obviously he's very conservative in what he does, which investing in LA you kind of have to be, right? You want to make sure you're not stepping on any landmines. So the way he looks at deals is very interesting, and it's taught me a lot when we're looking at deals out here. And as far as running them, like I said, we went into like war chest mode pretty much right away. Right, we prioritized renewals, so we didn't really push much on renewals or at all, really, depending on which property they were at. And so we were able to maintain occupancy fairly well throughout this entire time, and a lot of that was due to Mark's input. Having been through, he actually has a story. He closed. It was like the first deal he brought outside investors in on. And it was they removed contingencies, and then like a day later is when like Lehman Brothers collapsed. I don't remember which one collapsed, but it was like the worst possible time to be moving forward. And they actually ended up holding that deal and did pretty well in it. But having that, somebody who's been through that has been extremely helpful.
Yeah, because I mean, I remember giving a lot more credit for rent growth in
Yeah.
say like Knoxville or something, where they had year over year rent growth at 4.5 or 5%. I'm like, well, you probably, why not give the market credit for the rent growth that it's been achieving? Well, now I know why you might not want to put maybe all of that in there and be much more conservative, especially in the first couple of years, because that's the riskiest part of any investment. That's when you're most levered and um, have the highest exposure. So yeah, there's just maybe there was a bit of rose-colored glasses that I was guilty of. And then when you see agency debt doing stuff like, yeah, we're packing on all these reserves,
Yeah.
you know, they're very conservative to begin with, and if they, some of them seemed egregious, but I empathize with be well capitalized out of the gate.
Yes. Yeah. Yeah. It is one of those weird times though where like debt is so dang attractive. It's made buying stuff very interesting to look at, because we're seeing rent decline and occupancy decline, but prices increasing. And I
Oh,
think,
are you really? Yeah. See,
yeah,
we haven't had any, us personally haven't seen any decline in rent. Occupancy took a little bit. I mean, it's been
Sure.
a little bumpy, but yeah, the markets we're in haven't seen the decline in rents, but you're still seeing price increases. Yeah, and how does that make sense? I don't know.
Yeah.
Well, it's cheap debt.
I think that's exactly it. I mean, it started to taper off for a while there. I think it was also a lack of supply of product, which made the stuff that was trade at very low cap rates. But I think a lot of it has to do with debt, especially if you're, we're trying to look more at the conventional size just because of how attractive it is right now. I mean, you can get, sub 3% on some things with 5 years IO. It's hard to, you can look at deals through a different lens with that. I think the thing we're, I guess, still bumping up against is where do you underwrite, your exit caps right now when you're buying at those.
Yeah.
So that's kind of the
yeah. Price can be very relative to the price of money.
Yes, exactly. But if you get one of those, 2.65 10-year terms, you could always do an assumption, and that might be more attractive with that debt. I don't know if.
Right.
That's also probably what people who thought locked up deals at 4.5%, a few years ago for 12 years thought as well. So I don't know.
Are you looking at longer time horizons, generally speaking?
Yeah, generally. Yeah.
We'll edit out that awkward pause. That's the beauty of it.
Let me take a sip.
I was just going to see how long we can make it last. My wife does the editing on this, so we like to throw her something every now and then.
Oh, there you go.
Yeah,
there you go.
And actually, our minds just don't think fast enough sometimes.
I'm right there with you.
Yeah. Do you have a? We'll get towards the wrap up here, Greg, unless you have some other.
Yeah, we're at about an hour, so we can get towards the wrap up.
I guess, Nick, is there something that you do now or have always done to kind of start your day to, I don't know, something intentional? Is there a habit? Success, something like that. What's that look like?
I don't know if it's a habit for success because I've only been doing it for about, consistently for about 3 months now, but it's definitely helped me a ton, especially in the times we're in right now. Coronavirus hit, everybody was in lockdown. I personally probably didn't handle it as well as most people. And so it took me a while to work this into my routine, but morning runs, I was going on walks, but actually like getting out and going for a long run, has helped me a ton, both like mentally, obviously physically, but the mental aspects, the clarity that comes from it. I mean, I come back from my run, I literally have to run upstairs and like write down all the ideas I had on like a notepad. As far as like what it's been, when you're working through a problem and you're just sitting there, I feel like it festers in your head. So I would say just getting out and getting active, even when you're in lockdown. But
yeah, it's a true, Greg calls it a mind dump, and it's truly what it is.
Yeah.
Amazing how that happens. How you can get clarity when you're putting yourself through that physical push or rush, whatever. I love that. Is there a book that you love that? Well, I guess maybe a favorite book.
Yeah. Oh man. I read a lot of really good books lately. I usually recommend Shoe Dog, the Phil Knight story, because I love that one.
Shoe Dog.
But right now, if you haven't read it, it's amazing. It's the story of the guy who created Nike, but just to hear like what he went through, and it's really well told and very engaging. But it's like the typical, well, it's not the typical. It's the story you don't really hear about success, right? I mean, how he struggled to get it started. Not taking a salary for years, working as a part-time professor, just even when they were making millions of dollars in revenue. It's super helpful, especially in the position that we're in right now, right? As you're starting a business and trying to grow it and just kind of seeing, this is one of the most successful companies on the face of the planet and how hard they struggled for the first, 10 years or so to get it going. But the one I'm reading right now is Stillness is the Key. I don't know if you guys are Ryan Holiday fans.
Oh,
he does The Obstacle is the Way and Ego is the Enemy. So I'm only halfway through it, but I'm I'm already like going to be going through it again. It's really good. I like everything he writes though, so I'm a little biased, but Stillness is the Key by Ron Holiday.
You made me think about something that Greg and I talk about a lot is, talking about the Nike story and what that guy went through is.
Oh yeah.
Do you find yourself talking to people, potential partners or whatever in the multifamily space that totally underestimate the amount of work that goes into putting a deal together?
Oh yeah.
And just, it's a grind, man. And I'm not tooting our horn or anything. I just think people underestimate the amount of time and effort that goes into it. And guess what? Things don't go as planned. And you got to figure stuff out.
Yeah.
And you have to still go through it.
Yeah.
Have you seen that, or you just have realized, yeah, it is. There is very much a self gratification that comes with it after you've put something together and brought people in and close a deal. And for sure, I guess, have you experienced that or seen that? Agree, disagree?
I've experienced it personally, and I've seen it, a lot. Yeah, I completely agree. I think people maybe correctly estimate how long it will take them to get their first deal. Sometimes not. Sometimes they're very aggressive. But the process and the work that goes into getting it, I feel like is often underestimated. And then once you get the deal, a lot of it is like, oh, we'll just put third-party management in place. And it's like, most of the deals you see, people are being like, oh yeah, you bring in your management, you'll do a much better job. It's like, well, every management company can't be bad, right? So right. I love that reasoning. That's a bit of a tangent, but I would say, that's one big thing I see is people underestimating how much work it takes once you close the deal. And how are you going to handle it when things don't go your way? Right. When it's, 3 a.m. and, the cops are called on your property because for some reason, or something burns down, or even if it's something as silly as your occupancy drops to like 80%, how are you going to handle that? And I think you have to look at it, I think, slightly through rose-colored glasses to get into it and get moving and make offers, because you can't just look at it like doomsday 24/7. You'll never move on anything. Correct. But you still have to be, and maybe that's why you have partners at a deal, some person to be the doomsday and some person to be the rose-colored, so you can come to a consensus. But I see that all the time, completely underestimating how hard it will be and how much work it will take, and then getting discouraged when it takes hard work and it's, and it takes time.
Yeah, I'm really thankful that I have partners like Kim and Greg, and I would love to hear just a little snippet if you have that same thing with your partner, where you totally like have to rely on each other, and I think you can be at two extremes, and sometimes you meet in the middle to make things happen, or you just tell the other one, hey man, this is not going to work, and you have to trust in the decisions that the other one is making, or that the advice that they're giving you, just go and you just go with it. But I know that organically happens over time. But I would say it's safe to assume that you guys have that together.
Oh, definitely. Yeah. I don't know which one of us, is more rose-colored or pessimistic than the other, but we definitely feed off that. And there's a lot of times where I'm, following up with Mark and being like, does this make sense? What do you think? So we get that back and forth, because, if you have that like echo chamber when you're looking at a deal, it's very easy to be like, oh, this makes perfect sense. And then, you get halfway through or get to a point of no return, and you're like, oh, I didn't think about this.
Yeah. I mean, you have to love it when somebody calls you out on something and they're right. Yeah. I mean, I'm not every time, but I give something I'm like, tell me where I'm wrong. And, quickly, I don't mind being wrong, especially when it's found early. And don't have a lot of ego about, or even trying to be right. I'm not trying to be right. I'm like, this is what I see. What do you see?
Yeah.
And let's figure out if it's somewhere in the middle of the truth or whatever.
I'd be interested to know if that came naturally to you or not, because I'm the opposite. But starting out, I was like, in anything, I hate being wrong. So I always try, I'm always analyzing and trying to be right. And that was a big shift for me as we started getting more and more into this, is like reaching out and being like, hey, where am I wrong? I don't know if that's just something
I don't know if it's natural. I just don't want to be wrong when it's too late.
Yeah. Yeah. Yeah.
it's just getting in front of it.
Yeah.
Ego is not a problem for us.
Yeah.
If it was, we wouldn't be partners. And I think that when we do,
I'd have a much better wardrobe.
Absolutely.
If ego was. And maybe get my hair cut every now and then.
Yeah. Well, I totally lost my train of thought with Greg's humor. That's what I deal with, Nick, right there. That's awesome. I'm just giving him a hard time.
Yeah.
But yeah, we'll wrap it up. I mean, we're a little over an hour in. I'm sure we all got things to do.
Yeah.
Always.
But I like the run thing. I do the same thing hiking, and I think it's people maybe a little misled by things like that. Like, I unfortunately don't get out into nature and just have a clear Tao moment with oneness with the universe. There's still things going through my head as much as any other part of the day. What is nice is that I don't have the distractions to go along with it. I don't have the computer to chase down something or the phone or whatever. And you can spend a little more time thinking more intentionally about maybe one problem at a time. If I can do that, I'm like, okay, cool. Let's really break this thing down while I'm running for 2 miles.
Yeah.
And when you're able to spend some time in your own head without a lot of other input, it's pretty beneficial. Probably don't do it enough. And meditating kind of does that. I meditate, but I'm not sitting there being serene. My head's spinning as much as it always is. I'm just trying to
some stillness,
rein it in a little,
Yeah.
So
thanks for the book recommendations, man. I really appreciate those. I'm gonna check those out.
I think you guys like stillness is the key. That's pretty much exactly what you were just talking about, Greg.
Yeah.
Oh, well, there you go. All right. Right on.
There you go. As we start to wrap up, Nick, tell us how the listeners can get in touch with you.
Yeah. Easiest way is through email. It's just Nick, Nick, at quantumcapitalinc.com. You can also check out our website. It's quantumcapitalinc.com. And we have a podcast as well where we talk about, strategies you don't really hear a lot elsewhere because we invest in those high price appreciation markets. So if that interests you, we're at the Wild West Real Estate Podcast. So check us out.
Awesome.
All right. Right on. I appreciate it, Nick. I'll take us out, Darren. Thank you again for joining us here on the Real Wealth Solutions Podcast. We hope to see you on the next episode. Later.
See you, everybody. Thanks, Nick.
Bye, guys. Yeah, thanks for having me.